what we saw in the Comex, did you wake up? People were calling your phone left and right, selling, and then a couple hours later they were buying? Or did once again the Comex price have absolutely no correlation to anything actually related to the price of silver?
Yeah, there's virtually no correlation whatsoever.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And it's time once again for this week's physical silver and gold market update with Andy Schectman of Miles Franklin, because as we point out somewhat regularly on the show, there is the Comex price, which seems detached from just about anything, certainly the physical market. And how do you find out what's going on in the physical market when the Comex price tells you nothing about that? Well, that's why Andy's here each week. And Andy, thank you for joining me again today. How are you doing?
I'm doing really well, Chris. I hope you are too. It's getting to be the end of the year and looking forward for some holidays and some relaxation, if there is such a thing. But all is good, and hope it is with you too, buddy.
Well, it sure is. I'm quite excited to talk to you. It was an interesting trading week because back on Monday, the price went at 4 o'clock in the morning from about $24.10, dropped 50 cents quite quickly, and then later rebounded, shot back up a dollar higher. So I was picturing your office kind of like that movie, or maybe like the movie Trading Places, where everybody's cornering the market, sell, and then the Mortimers show up and everybody's in there buying. Did what we saw in the Comex, did you wake up? People were calling your phone left and right, selling, and then a couple hours later they were buying? Or did once again the Comex price have absolutely no correlation to anything actually related to the price of silver?
Yeah, there's virtually no correlation whatsoever. It's an interesting phenomenon where when the price falls, I would argue almost exclusively as it relates to physical demand, Chris. I mean, when the price has fallen, no one is selling. You get people who notice it. You get the emails where people are a little freaked out and wondering what they should do. Should they add more? Do you see it bottoming, et cetera? But by and large, the gyrations on the Comex have very little to do with buying and selling. I think they have more to do with people's psyche who are on the fence, people's psyche who have been looking for alternatives to the dollar, and one of their buddies told them to buy gold or silver or something like that. It certainly influences perception, but it doesn't, in my opinion, have virtually anything at all, at least these days, with a correlation between people buying and people selling. Quite frankly, it's a subsidy. And I think, as I've often said on this show, verbatim, it's because of people like you that are alerting the masses of as to what's going on. Look, I mean, when you take a look at Comex, Chris, it's when you see that the big 8 shorts on Comex are 300 million ounces short, you know, that's a lot of firepower to drive down the paper price of silver temporarily. But the thing of it is that it reaches a level whereby it just attracts far too much attention. People start to value, hunt, to bargain shop, and then the premiums go up and the supply disappears. And it's the same thing that we've seen over and over and over again. And I think that's really the most important thing for people to look at, in that when you buy gold and silver, it's not about getting wealthy. It's not about return on your money. It's about return of your money. And I would be lying and disingenuous if I didn't say that, yeah, I mean, everyone's aware of what's going on with the price when you own the asset, but it really is more harmful than it is good if you believe the premise that we are heading down a path where ultimately silver expresses itself. $100, $200. I mean, it's in the charts. It looks real to me. Those types of declarations. I mean, I don't know where it stops, but if you told me it would go to 100, I wouldn't be shocked at all. Any more so than I was, you know, in in 1989 when I started, when the Nikkei was 41,000 and I watched it fall all the way down to 12,000. Or when the Dow Jones, when I started, was 2,100 and watched it go to 30,000. Markets always go higher to the upside than people ever give credit for, and will always fall further to the downside than people ever suspect. And I think that will have real significance with traditional investments when people will be caught blindsided, and will also go higher than anyone thinks when the price goes up. I mean, look, let me just ask one question, and to you, I'd like to ask you this question, because if anyone understands what happened with JP Morgan, it's you, due to your fantastic interview with Bart Chilton. But do you not think that JP Morgan noticed that the supply was such that accumulating close to 1 billion ounces in physical silver on the cheap would be very significant, when we would have a situation where the industrials are going to battle the value hunting investors who are looking to capitalize on something that is truly undervalued, that is half of what it was in 1980. And when I really try hard to think of assets that are priced in that metric, half of what they were in 1980, I don't come up with any, with the exception of silver, at least off the top of my head. And so, JP Morgan has locked themselves in to massive profits, as at some point the realization becomes more mainstream, and that not only is silver a depleted asset with, as you mentioned the other day, close to 330 million ounces shortfall this coming year projected, in a world that needs it more than ever, with a drive to battery-powered automobiles, with the Green New Deal and all of the major utilities that silver plays a part in. At some point, when the industrials take a big position, which they most certainly will as the price becomes higher and the supply becomes tighter, then you get the value hunting investors who are looking for value, who are looking for upside potential. Both are found in silver. I think it's an incredibly unique position. My question to you is, do you think JP Morgan accumulated this silver understanding that this was coming? I'd like to hear what you think.
Well, I don't know if JP Morgan's sitting there calculating the industrial usage. And I like to factor in that I don't know exactly how many ounces JP Morgan has, but I mean, you see what's on their Comex position, and why else is someone holding that? I mean, that what they show in their Comex report, I believe, was more than both the Hunt brothers and Warren Buffett held, at least in physical. And there's a lot of things I don't understand. Why are they holding that? And be clear, there's the customer and the house account, and this, at least as far as I can interpret the report, is in their house account. It also doesn't make sense to me that they get labeled a criminal enterprise, fined $920 million, and then Reuters puts out a story about how they're dominating the gold and silver market. Well, yeah, we found out how they dominate the gold and silver market, and again, that's why I asked about the whole price thing on Monday this week, where I don't know what people are supposed to think, other than something doesn't feel right here. And I don't claim to have all the answers, but at least continue discussing it to anyone that has insight and trying to figure out what's going on, because as simply as you can put it, the physical market and Comex price are not connected. They don't make sense together.
Well, look, I don't mean to flip-flop the tables on you and shine the light on you. I just simply think that, look, I think if I had to guess, we're going to have a battle between the industrial silver users who need the silver to stay in business and the investors who are looking for massive gains in an undervalued asset. And I really think that JP Morgan understood this as they accumulated, according to Ted Butler, close to 1 billion ounces. So, look, the bottom line is simply this, is that here again, this is all misdirection and distraction. The gyrations in the price are being used to shake the weak hands from the tree, to dissuade the people who are on the fence from looking here and looking elsewhere instead. It is all about misdirection and distraction. But I'll tell you, and as we've said before, that battle between investment, which for an asset that is massively needed in an in a electronic age, I think will be enough to, let alone the Green New Deal, will be enough to wake up the industrial users to securing supply, so it is no longer an issue, because silver being inelastic, it must be used for these products, and because it's used in such tiny amounts, in the end, the manufacturer shouldn't care too much. But what they would care about is not being able to get it and not being able to make their product. At one point, that has to happen, and I think that'll come at a time congruent with an awakening of Main Street, not just the people who listen to you or buy from me, but the people who have been locked into a supposed 60-40 traditional, 60% stocks, 40% bonds, traditional ideology portfolio that could really get hammered this time. And the reason I say that is because it's always been where stocks and bonds were inversely correlated. That positive correlation and inversely correlated interest rates, we're seeing the 10-year Treasury creep up. We talked earlier in the year, it was 60, 65 basis points. I think it's closer to 80, 85 now, maybe even a little higher. At some point, interest rates have to rise.
Overwhelming yield.
Yes, exactly. Well, speaking of that overwhelming yield, look, the Fed has said we're going to pay you 70 or 80 basis points, and they also say that for the 10-year Treasury, the Treasury says we're going to give you 70 or 80 basis points, but the Fed says we're going to strive for 2% inflation, and putting that on the same page, that would be 200 basis points. So that's what they're going to strive for, and they could overshoot it, as they said. So at 70 or 80 or 90 basis points on the 10-year Treasury versus 200 basis points on inflation, you're guaranteed to lose like 1.2% to the purchasing power of your money every single year, no matter what. If this isn't an argument for gold and silver for the mainstream to wake up, I don't know what it is, matched up with the most overvalued stock market in history. That day will come. And if it is congruent with the industrials securing position, here's when you get those types of massive price surges. And so when we see the price pull back, no, we don't see people selling. We see people who are educated to the shenanigans. And when you see 8 banks that are short right now, 300 million ounces of silver, this is getting real for them. And so anyways, I think that's coming, because right now, as it is, these banks are out almost around $13 billion just in the rally in gold and silver over the past year. Reporting at the end of the year to your board of directors and finding a legitimate reason to be short that amount of gold and silver and getting your ass handed to you is something that I think is also going to have a bigger effect to the decision makers who are making these decisions. Maybe this is why Scotiabank is heading for the hills, and maybe there'll be more to follow. Anyway, I don't mean to once again be so long-winded, but I guess I would just simply say, Chris, that the price is the single greatest tool of misdirection, period. And because very few people do what you and I do. You and I spend inordinate amount of time researching and studying and looking for truth and looking for facts. You especially, you talk to people all day long about this. Most people, they work their butt off. Time is blurred. Everyone's so busy. They come home and the last thing they want to do is study and research in a world where it seems we're all so busy, even locked down, maybe for some of us even busier. It becomes an issue where if you can control the rhetoric through price and through lame media representation of the supposed truth, you can create a narrative that is embraced by the public. So, it's don't look here, keep on walking towards the stock market door, ladies and gentlemen, that has been the message that's been pervasive for a very long time. They'll come back to our door very soon, I believe, and that being the mainstream. And when that happens, that's when you're going to see where you'll see massive price swings to the upside. And you will, I think, at that point, you will associate it with massive physical demand. Because right now, the drop in the price, in my opinion, is 100% not associated with physical selling. It just isn't. It's paper-derived 100%.
Yeah, well, that's the way they roll over there. Although, Andy, we have some reader mailbag questions as your fan club continues to grow. Here's one coming in from Canada. He was focusing on Canadian buyers. Maybe you could answer the question, and American and Canadian buyers, and let us know if there's a distinction. But for buyers looking to jump into the market, what are safe third-party bullion dealers to acquire supply? What are safe storage options, tax implications? Also get a lot of people asking how to sell. How are they going to sell their metals later on? And probably the easiest answer, I'll do that one. Just email Arcadia at milesfranklin.com. We'll be happy to buy it. But Andy, can you start with, if people are just getting started, hearing this from the first time, we'll rule Miles Franklin out as an option now to be completely unbiased, but if Miles Franklin didn't exist, where you help people get metals safely, how would you go figure this out?
Oh, I think the most important thing is reputation and track record. I think that more than anything, that is the most important metric. It's a federally non-regulated industry. So speaking of Canada, it's a little bit different. In Canada, there's a handful of really solid companies up there. The one that I'm associated with very closely would be Border Gold in Vancouver. Rob Levy, amazing people, great product, great prices, super good guys. If I were buying in Canada, that would be the first phone call that I would make 100%. In the US, because it's federally non-regulated, it's an issue. And I want people to really understand this. In the past several years, you had 3 or 4 of the biggest online companies go bankrupt. Northwest Territorial Mint, Tulving, and Bullion Direct. And they were always amongst the least expensive companies across the board. I think that the last thing that you really want to do is focus solely on price. Granted, it is a commodity, right? And in the end, the difference between the product from one company to another, there is no difference. The product is the same. The only delineation, the only differentiation should be the way that you are treated, how promptly you get your metal, the reputation and track record of the company. I would not look specifically at price. While price is important, and it is, I've been public to saying that we will do our best to give people as good or better price than anyone in the country. I am cognizant of price. But more importantly is reputation, because it's federally non-regulated. So you want to take time to give the people a call, talk to them, get your questions answered, to do a little background digging, look at the Better Business Bureau, Google the name of the company with complaints or fraud. These are all good metrics, because look, the bottom line is when you're talking about accumulating gold and silver, you have to send your money to the company first before you get your product. You lock in an order, they give you an invoice, you send them your money. There is a modicum of trust involved. And I would argue in both parties' cases, because when that dealer locks in the order, he's expecting you to pay, just like you're expecting to be delivered. And these are the types of things that matter. Do they have any complaints about lengthy shipping time? As it turns out, Northwest Territorial Mint was running an 5, 6, 7, 8-year Ponzi scheme. Always people complaining about the length of time in which it took for the product to be delivered. Are they the absolute cheapest online, not even close to anybody else? Red flag, should be, is to me. If a company is within a few cents or a 0.5% or 1% of everyone else, good. Then from there, base your opinion upon their track record and upon their reputation. And to me, that is the most important thing to do, is take accountability. I'm very proud of my reputation, and I'm sure the good companies out there are of theirs as well. And there are a lot of other good companies out there. But I would be lying if I said that this isn't an industry that has attracted a lot of fraudsters, because it is federally non-regulated. There is no oversight like an SEC or an insurance commission or a banking commission. This is kind of the Wild West. So that's why I say stay away from focusing singularly on price, albeit be cognizant of it, and focus more upon the vibe you get when you call the people, the reputation they have online, their association with people like you. These are the kind of things that, the people who promote and endorse other precious metals companies, that's their livelihood relies upon giving good information. So all of that stuff combined, to me, is the way to approach this, Chris, to trust people who are trusted in the industry, not who are the cheapest.
Well, that makes a lot of sense. And similar question, but in terms of the storage options, I would imagine the answer involves a lot of those same elements. But anything else you could say if someone's looking at storage for the first time? What do they watch out for?
Yeah.
What do they need to know?
Bullion Direct stole, if I'm not mistaken, $35 million, and it was all metal stored with Bullion Direct in their vault. First rule, never store with the company that is you bought it from directly. Now we have, as an example, storage programs with Brinks, worldwide exclusives on fixed rate structure, and a North American exclusive on safe deposit boxes in Canada. They're the administrators. They are a Fortune 100 company who doesn't mess around. And you don't ever want to trust the person who you paid the money to be holding it in their personal vault. All of the storage options that I would recommend are all third-party administered. And so I think that Brinks is the top of the food chain. There's the Dakota Depository in Fargo, North Dakota. There's a lot of good ones. There really is. And I would just, first of all, say definitely don't put it in a safe deposit box here in the banks, here in the US. Not insured. Most of the banks actually have rules and regulations against storing metal and currency in the safe deposit boxes. Many horror stories out there by simply Googling it. I would stay away from safe deposit boxes. I would rather people become a midnight gardener and bury it in their backyard in the middle of the night than keep it in a safe deposit box. But if you are going to go third-party storage, just go with a company that is trusted and one that has a good reputation. And so, the top of the food chain being Brinks. And from there, if any of your listeners are interested, they can certainly email Arcadia at Miles Franklin for some suggestions and also for some links to some respected third-party storage sites where you'll never have to worry about any impropriety whatsoever.
Well, I appreciate that. Andy, question I get from a lot of people is, how will they sell their metals one day? And I don't know. I mean, maybe it's just me. I've never really had a concern of that. In fact, it's actually exciting when I hear that question now, given the stuff that I do with you, where I can go and market and offer bids. To me, it's like, all right, maybe if you're in Amsterdam or Berlin, how do you sell a $100 bill? Well, I'll bet you can find, you'll pay a fee, but you'll find someone. And if you have really wide spreads, maybe it'll be people like me or other entrepreneurs who will come in and try and match supply with demand. But what would you say to that?
Well, you remember the first time my first association with you involved selling a bar of silver. So, I think the selling is very easy. And it's also really important to, look at that when you're dealing with a company, the round trip. We make that real easy. And typically we will always get people the highest bid price in the country. But it's just the same thing in reverse. The client calls, they tell us what they have, they lock in the commitment to send it back in insured mail, which is the only way for people to do it. Registered and insured, not certified, registered and insured. And the reason that's a pain in the ass is that you have to, once you put the coins in a box and seal it up with regular tape. You have to cover the seams of the box with brown paper tape, registered tape. And it's weird, typical for the U.S. government, anything. They have it at the post office behind the counter. They'll let you use it, but they don't sell it. And so if you have a bunch of boxes to tape up, you can go to Staples or online Staples and get the brown registered paper tape with the best is with the nylon through it. But if it's a really big deal, we can have UPS come and pick the stuff up insured at people's homes and send it back. Upon receipt of the metal, we send a wire or overnight a check. It is that simple. It's the exact same thing in reverse as purchasing, with a little bit of effort in shipping. So, but yeah, we can help people with that, and we will always provide a two-way market and always offer people what I believe to be the best and strongest bid price in the country.
Well, I appreciate that. And yeah, I can testify there. First time we did talk, it was, I mean, in case people wonder whether I believe or act on the things I'm saying, everything was in silver. I guess I did have a few cryptos then, but I didn't have any cash. So this was while I was building a business, and so it was difficult. I guess that's the challenge with selling silver, is like, hurt. But
well,
yeah.
I respect that a lot about you, Chris. I've watched you build this business from the ground up to being one of the most successful and respected orators and interviewers of this ilk in the industry, and I think it's fantastic. So, you know, I think I will vouch for your integrity and your word and your honor, and for all of you listening out there, it's everything that he is saying. He does and believes. I've seen it with my own eyes over the last several years. So that is something that I can say unequivocally.
Yeah, trying being forced to sell silver to pay expenses when it's $17. But the challenge is that we get through, and but yeah, I really do appreciate, because it's weird, you know, like a brokerage account we're used to doing. Yet I just felt overwhelmed, and you did make that easy. And again, if anyone wants to sell silver, Arcadia at Miles Franklin, you may email there anytime if there's any scenario you foresee where you're concerned of how you would sell your silver. My partner Yara handles that email box, but certainly can reach me, and happy to. In fact, I'm looking forward, if there is some situation where it becomes difficult, helping to be part of that solution. Andy, one last real quick reader's question that we had here.
Yeah.
Perhaps we can dig into it a bit more next time, but someone was mentioning about how you can do things with an IRA for gold and silver. Most people don't even know about that. So maybe you can just touch on real quick, what are the options that people should be aware of?
Sure. So you can buy precious metals, physical precious metals, in an IRA, first and foremost. And there are some ways, I call it a loophole, where through an LLC you can take physical possession. I dissuade people from doing that. I think it is something the IRS would frown upon. LLCs were not made in the spirit of usurping or finding loopholes in IRS code. That's number one. Number two, most people will own it through a self-directed IRA. And what is very cool about the physical precious metals IRA is that through distribution, whether it be a mandatory distribution, it used to be when you're 70 and a half, I think they bumped that up a year or two, but whether it be through mandatory distribution in your early 70s, or a voluntary distribution, anytime you can request distribution in kind. It's a like-kind distribution. And I'm going to send a quick plug out to the Dakota Depository in Fargo, North Dakota, both through Entrust and New Direction. New Direction in Louisville, Colorado. Entrust, they have a few corporate offices, not exactly sure where they all are, but they both use the Dakota Depository. And one of the key things about the Dakota Depository is they're one of the few depositories out there that physically segregate IRA metal. Now, just give me a minute or two longer than we normally would answer that question, but you know I'm long-winded anyway, so you kind of walked into this one. The IRAs, in terms of being able to take possession of them, if you are going to take possession of the metal at some point, if you view that as being important, you want to work, I believe, with the Dakota Depository through Entrust or New Direction. And the reason I say that is that all of the IRA custodians that hold the metal, the depositories, not the custodians like New Direction or Entrust, but the depositories who hold the physical metal, they typically work out a sweetheart deal with the custodians because the custodians can send them lots and lots of clients. So they lowball their storage rate and typically will pool it. It will not be segregated. And I have seen so many horror stories. I can't even tell you. We could talk about that next time if you'd like, of people taking in-kind distributions from custodians or depositories that pooled the gold in the IRA and did not segregate it. The Dakota Depository, to my mind, is one of the only that segregates IRA metal and does it at a very, very, very low price. And therefore, if you ever plan on taking physical possession of the metal through distribution, this is really great for people who are in or nearing distribution phase, over 59 and a half. Now you can start taking your metal in lieu of a cash distribution. It makes it much easier for people to make a big splash in the gold and silver pool without writing out a check. Now I'm going to touch on two more points. Number one, being in an IRA, physical metal in an IRA, allows you great ability to switch between gold and silver to play the gold-silver ratio, to increase ultimately your stack of either metal by playing that ratio, because it's A, in a depository, and B, there are no taxable implications while it's under the IRA umbrella. And two, you could make an argument right now that we are at a point in time where converting to a Roth IRA right now makes a ton of sense. Why? Because in a Roth IRA, you could right now have a traditional. Let's say your traditional is worth $100,000. That $100,000 you haven't paid taxes on. Uncle's sitting there with his hand open, and he's going to get a portion of that. So if you choose a Roth IRA, you pay all of your taxes right now. You convert to a Roth, you pay the taxes right now, and that could potentially, be a big nut to bite off. That might be $30,000 of that $100,000. That's gone. It goes to Uncle. But now you're in a Roth IRA, and all of the gain moving forward is tax-free. Plus, you could argue that under a democratic regime, taxes will go higher, and the metal in which you are invested in goes higher. So if I were going to give someone some unique advice, I would say consider switching your traditional IRA to a Roth IRA and funding it with silver. Now, if taxes go higher, so what? You've already paid them. All of the profit from that point forward is tax-free. And as far as the price of metal going higher, so what? You've already paid your taxes. So I guess the bottom line to me is that converting to a Roth IRA and then adding physical metal to your portfolio through the Roth gives you not only really great flexibility, you can take possession of it right away. You've already paid the taxes. You can lock in that upside potential as it moves higher, free from taxes. And I guess the bottom line to me is that in a traditional IRA, taxes are going to go higher, and so too is the price of silver, which will just make your implications much, much heavier down the road. So anyways, it's a cool program. It's something that, especially for people who are a little bit older, who aren't looking for the compounding of interest right now in their investments, they want exposure to physical metal, and you're able to then start taking distribution. It's a very cool program.
Well, thanks for sharing that, Andy. That is helpful. And we've got about a minute left here. Can you just let folks know how they can contact you and what this week's silver special is?
Yes, sir. Yes, sir. So they can always contact us at Arcadia at Miles Franklin with specific questions. And this week's special isn't as fancy as last week's. I want to real quick say, if by the time this airs on Saturday, if we still have any of the Call of the Wild Birds of Prey or Predator series, plus a few of the Australian funnel web spiders, a couple boxes we had, I would buy those immediately. They're impossible to get. They are super, super rare. Every company in America sells them for many, many dollars higher than we are offering them for. It's the best promo special we've offered the Arcadia listeners all year, without question. If those are gone, I have the opposite end of the spectrum. I have bags of $50 that I can do at $1.75 per ounce over the price of silver. I have a feeling that will be the very lowest price in the country for junk silver bags, $50. I was able to secure a very large purchase of pre-1965 U.S. constitutional $50, and it's really, really, really good buy. And if things get really bad in this economy, the utility of having $50 are really neat. And one last thing, you know, people often say when we talk about pre-65 silver, well, dimes and quarters, they're not real fancy. I agree. Neither are the $50, but most people who are 20 years and younger age have never even seen a $50. So it still has a little bit of the wow factor. It's easier to say to someone, hey, these coins minted prior to 1965 have 90% silver in them. And when you look at a silver $50, they have right now somewhere in the neighborhood, I don't know, $8 melt value of silver in them. So anyways, something like that, maybe a little bit less, somewhere in that neighborhood. I have to figure it out, $8-9, but everyone should own some. And that's why I'm offering that as a special here for this week.
Well, I appreciate that. Thank you for this week's update. And folks, for more coverage of some of the wild action, including Andrew McGuire's interview this week and this month on Arcadia Economics, that is coming your way now.